Previously, I've talked about the problems of using fundamental analysis in our stock investment research. Not being biased here, but technical analysis isn't that perfect as well. Some of you may have encountered either one or more of these problems. So, what are those? Let's explore them in today's video. Technical analysis looks at various chart patterns like head and shoulders, double top, double bottoms, and cup and handles. Combining those with candlestick patterns like your bullish or bearish engulfings, your dojis, your morning or evening stars, whatever you like to call them. Sometimes even using technical indicators like your RSIs, your stochastics, your Bollinger Bands to help us time our entry into the markets. The few key problems that we will face when using technical analysis includes unconfirmed patterns. When we look at chart patterns or candlestick patterns, we wouldn't know what pattern it will form until, well, they are formed. Before a pattern is completed entirely, we can only have a rough guess of what it might be. It may form the pattern that we expect it to form, or it can form another pattern, or there won't be any patterns at all. Let's look at a chart example to have a better view.
Alright, let's have a look at the chart of IVV, which is one of the ETFs for the S&P 500. As of the day of recording, which is the 20th of January, during market trading hours, I noticed a triangle pattern is about to form. Now, how does this triangle form? You will have a downtrend line connecting the highs, and in the short term, there is an uptrend line. Now, the thing is, this triangle is still in the midst of forming. It can either break the resistance and move higher to new highs, or it can break the support and move downwards towards new lows. Alright, so I can only make guesses. So we'll just need to wait the candles to form for at least a few days or even up to a few weeks. Then we will know whether the market will form new highs or it will form new lows. Even when it comes to candlesticks, we can't really tell which direction it will go when the trading day is still ongoing. Now this is a candle of a trading day. It's still ongoing. For now, it looks like a doji pattern. But as the market still have few hours to go, it can make literally any pattern. It can slightly break through the resistance or even break through the support, or it could just remain as it is. This is the US market and our timing is 12 hours apart. When I wake up and look at how the market closed, chances are the pattern will be very different.
The next day.
So looking at the charts again, we can see that the candle actually closed with a very bullish signal as compared to the doji pattern as we have seen when the market is still open.
Similar to fundamental analysis, technical analysis will have contradicting signals as well. Can be in the form of technical indicators clashing with your price action, or it can just be a clashing between the different time frames that you use to perform your analysis. Let's have a look at a few examples to understand this a little bit better.
Now let's have a look at the chart of IVV again, but now in weekly candles, and let's look at a longer period of more than 5 years. Now in the long term, you can tell that prices are moving on an uptrend by looking at the moving averages. This is the 50 moving average and this is the 150 moving average. Now in order for a chart to be considered an uptrend, the 50 moving average must be above the 150 moving average. This has been the pattern for the past few years. Even until now, the 50 moving average is still above the 150 moving average. But of course, the 50 moving average now is sloping down, so this is considered like a consolidation pattern or a sideways pattern. But if we move back to the daily candles, you can tell that the trend had actually reversed back in April 2022, where the 50 moving average crosses below the 150 moving average, and prices has been consolidating since then. So it is still on a downtrend. So now the question is that, do you take this as a downtrend or do you view it as an uptrend? This is judgmental, it's up to each analyst's perspective. Once again, let's have a look at the chart of IVV again, and this time with a few technical indicators. One of it I'm gonna use is the stochastic, and another one is the Bollinger Band. Now a little bit of theory for stochastics. When it falls below 20, this region, is that the chart is considered oversold. So what this means is that when stocks are oversold, it's time to buy. And when it crosses above 75, it's called overbought. So it's best to sell your stocks. For Bollinger Bands, there is an upper band and a lower band. The line in the middle represents the 20 moving average. Theoretically, when the candlesticks hit the lower band, prices will rebound. Same goes to when the price hits the upper band, prices will rebound. Then of course, there is the moving average that I've shown earlier. Let's go to moving average first, and just gonna bring back the Bollinger Bands. Back in April, just looking at the stochastic, prices are oversold, so it's best to buy. Similarly, if you notice the Bollinger Bands, the candles have already touched the lower band. But if you notice that the price continue to fall, even though the stochastics say you can buy and the Bollinger Bands say you can buy. So the contradicting point is the moving average. During this time, the 50 moving average has crossed below the 150 moving average. So it's a signal that we shouldn't buy, rather we should sell. So which indicator should you trust? Similarly, this is up to each analyst's perspective. Generally, indicators are not that favored. You can just rely on moving averages, price action, and chart patterns. Of course, using too many indicators may result in analysis paralysis.
So yes, technical analysis isn't perfect as well, but it doesn't have to be. Even with its imperfections, it can still work to our favor. If you are investing for the long term, fall back to the fundamentals of the company to decide whether you can continue investing and holding for the long term. As a trader, be sure to exit immediately when your stop loss has been hit. Thanks for watching this video. I hope that this video has been helpful to you. If it is, do subscribe to this channel to keep updated as and when I upload a new video. And see you in the next one.